Let's go ahead and get started. First of all, welcome to the 3 o'clock webinar. I'm probably going to start doing one of these every week at 3 p.m. On Thursdays. So let's get into it here. Today I'll be available for questions throughout the entire webinar. If you've got a question, just type it in. I will stop what I'm doing and answer your question. If I don't see it, give me a few minutes. Let's go ahead and get the disclaimer out of the way. The risk of loss trading any financial instrument, such as Forex or binary options, can be substantial. You must be aware and willing to accept those risks in order to invest. Don't trade with money you can't afford to lose. This is neither a solicitation nor an offer to buy or sell any financial interest. No representation is being made that any account is likely to achieve profits or losses similar to the ones discussed here. Past performance is not indicative of future results. Any strategies discussed are for educational purposes only and are not to be construed as specific trading advice. This material is for educational purposes only. And TraderBot Marketplace or Joaquin Trading is not affiliated with Cantor Exchange, and the views discussed in this webinar are the views of TraderBot Marketplace and not the views of Cantor Exchange. Hey AJ, how you doing? Glad to see you here. Okay. Today we're going to talk about how to avoid some of the most common trading mistakes. Now there's a ton of trading mistakes that I make. I just made one today. I'm going to show you in a few minutes, and after I actually made the mistake, I went back into this little presentation and added it in, because we can all make little tiny mistakes that can have a huge impact on our trading. Thankfully, the mistake that I made earlier, I didn't trade large. And I will tell you why as we get into this presentation. What? Hang on. Okay, here we go. Okay, think about your trading mistakes. What are some of the common trading mistakes that you guys make? You can just type it into the chat. I'll go ahead and tell you the common mistakes that I make. Sometimes I will look at the wrong expiry. Sometimes I will look at the wrong strike. Things like that. What are your mistakes? Sometimes maybe are you trading too large? Would that be one of them? Maybe jumping the gun and trading because you think the market is going to move in a certain direction. I've done that plenty of times. So this is not anything, to do with you. This is all traders. We all do this. There's mistakes, and if we know what the biggest mistakes are, then we can go and we can correct that problem. So let's look at the top 5 trading mistakes. Now these are from my perspective. John says overestimating trend direction links. Oh, I totally hear you there. Let's look at the top 5 trading mistakes from my perspective. There's all kinds of them out there. Nobody can actually pinpoint the top one. We can try, which I've tried here in a few minutes. Okay, big fat trading mistake number 1. Stop listening to other people without doing your research. I mean, seriously, whatever you do, don't listen to this guy at all. Don't listen to this guy either. That's me. Don't listen to me. Don't just blindly follow somebody without doing your research into who are they, what do they do, what's the performance, things like that. Research everybody that you're going to listen to. Don't blindly follow anybody, because there are a lot of not so great traders out there. There's a lot of them. Okay, so here's a fact. No one knows what the market is going to do. Seriously, nobody. I don't care who you are. I don't care if you're on CNBC. Nobody can tell you what the market's going to do. They can tell you what the market may do, what the market has a probability of doing, or what the market has done in the past. But they can't tell you 100%, oh, the market is going to go up tomorrow. If you see anybody that says the market will go up tomorrow, 100%, whatever, just turn around and go the opposite direction, because that's not going to happen. The market may go up, but nobody knows exactly what's going to happen. Listen to no one unless you're willing to do your own research. I already covered that. Big fat trading mistake number 2. Stop thinking too large. Now, you can think large. You can look out, 10 years down the road, I want my trading account to grow by this amount, over the next year, 2 years, 5 years, whatever. But stop thinking too large about today. I've got to make that big score today. If I don't make this trade, I can't pay my rent. Or, if I lose this money, I'm done. if you're thinking like that and your trading is all, all surrounded by trading too large or thinking too large for today, it's over. You got to stop doing that. I used to do it. I blew out 9 trading accounts doing that. So if you can't make $1 consistently over and over, how can you ever expect to make $1 million? Because you can't. You can't, because if you cannot consistently make $1, I'm not saying make $1 on every trade. I'm saying make $1, lose $1, make $1, make $1, lose $1, make $1, make $1, lose $1, and you have an upward equity curve. If you can't do that with $1, you can't do it with $100 or $1,000. It's not going to happen. Big fat uber stupid trading mistake number 3. Stop trading too large. Now we touched on thinking too large. However, if you have an account, let's say it's $1,000. You're getting ready to see my account. I think there's like $1,300 in there, something like that. And we're going to go over proper position sizing here in just a minute. But if you have an account worth $1,000 and you're trying to trade, let's say 100 at the money contracts with counter exchange, you're risking 10% of your account on one trade. One trade, 10%. That would be like, risking 10% of your house, of your home on some type of whatever deal that you made with your neighbor. Nobody's ever going to do that in the real world. You're not going to risk 10% of your wealth on anything. Not unless, you're rock solid, guaranteed this is going to happen. But in trading, there are no guarantees. So you cannot trade that large. Big gigantic trading blunder number 4. Don't blindly trade any mechanical system without testing first. Now, there's a guy in here named Mr. Greer. We're going to be talking about that because we're going to talk about support and resistance again this week. We covered it a little bit last week. We're going to do it a little bit more today. And Mr. Greer, don't forget to remind me about that whenever I open up the charts here in a little bit. Mechanical systems are great, but you have to test them first. Every single one. If you look online and you see, fancy trading, RSI, algorithmic, no one's ever done this before type thing, don't just go in there and do what they say. Test everything. Whatever I say, test it. Put it to the test. Okay. Know how often it wins or loses. Know your max drawdown or risk. Know your potential profit. You've got to know that on every single trade. Super large and excessively ginormous, stupid and absurd trading mistake number 5. This was the biggest one of them all. And this one here, if you don't do anything else but listen to this one, you're going to have a better probability of making money in the future. Don't get emotionally attached to your trade. Again, we all do it, myself included. Every trader that I've ever known at some point has got emotionally attached to a trade and blew out their account. Trades are like McDonald's. There's just one around the corner all the time. So don't get emotionally attached, because you're going to find another trade tomorrow and the next day and the next day. And these are just some generalities on trading mistakes. Now, the next few trading mistakes concern binary options only. Okay, number 1, time frame. Now, I have a problem with this. I'm going to show you. I'm going to pull this screen down. Wait. I'm going to pull this screen down a little bit here. Time frame. This right here. Pay attention to this, because if you don't, you're going to make a trading mistake. I made one earlier, and I will show you that shortly. How many times have you looked at a chart, analyzed it, and then later found out you were looking at the wrong time frame? I did that today. It happens. You got to watch that. It's best to have a checklist. I've got a checklist on my wall, but I didn't turn around and look at it before I made the trade. Number 2, expiry. You've always got to make sure that you have the proper expiry. Now, if you don't have the proper expiry and you're trading a 5-minute expiry when you thought you were trading a 1-hour expiry, well, the trade is stupid. I've done it. I did it today, and we will get into it. I've traded a 5-minute contract when I thought I was trading an hourly contract more often than I would like to admit. Number 3, risk. check to make sure you're trading small enough. Use the 2% rule. Never risk more than 2% of your account balance on any one trade. We'll talk about that more in a few minutes. If your account balance is, let's say, $1,000, then you should never risk more than $20 on any given trade. Don't go in there trying to say, you know, look, I just turned this $1,000 account into a $2,000 account, 100% return today. That's junk. You're going to blow out your account in the future if you continue to do that. Again, I've done it. So you've got to, you got to watch your risk. Attitude. Never sit down to a trade with a bad attitude. Look, and I'm going to be pretty blunt. If your wife left you, if you found out you have a disease, if somebody punched you in the face, if you just don't feel good, if you've got the flu, maybe you're sad, maybe your girlfriend broke up with you or whatever. I don't know. Whatever the case, if you're not in the right mental attitude, you're not going to be able to trade effectively because you are going to get emotionally attached to your trade. And then you're going to say things like, screw it, I don't care. I don't care about this trade, and you're just going to do anything. So your attitude has got to be spot on before you sit down to trade. Believe it or not, your life, my life, everybody's life goes a little bit like this. Now, I don't care what religion you are, Christian, Muslim, Buddhist, whatever, but this is a good quote. What we think, we become. And that's pretty true. If we always sit down thinking, man, I suck at trading. I'm horrible. I'm never going to make any money, but I continue to try to learn, but I have that attitude, guess what? I'm not going to become a trader. It's just not going to happen. If your negative thoughts are controlling everything that you do, and you have a pretty bad life, your trading is going to go the same route that your life is going. However, if you've got a good attitude and you think, yes, I can do this, I will do this, and you're determined and you're committed, then you will be able to learn it. Being determined and committed, having a good attitude is, that's spot on. You got to have that. And here's a biggie for me. Now, I hold a lot of trades till expiry if they're far away from the strike. However, I also use the 595 rule. The rule states, and I don't even know where it came from or who said it, but the rule states that if your trade ever goes into profit up to 95 or down to 5, let's say you bought an ATM contract for 50, if it goes up to 95, it's okay to close that for almost full profit, especially if it's like you're trading an hourly contract and it's about 30 minutes into the trade. Go ahead and book it. Let's see what I write here. If you are in a trade that goes from 50 to 95 and there's still 30 minutes left in the contract, book it. There's always the next trade, but waiting for that extra 5 cents per contract is a no-no most of the time. Oh, no, don't disregard that. I just wanted to get through this little section here before we go to the charts. Okay, so think about some of the things that I mentioned a few minutes ago. Now I want us to look at this, and I've got a little tool. I'm going to put the address of this tool into the chat. Hang on. Okay, in the chat I put a URL. I want you to go to that URL, and here's what we're going to do. Here is the URL. When you click on it, you're going to see this screen right here. Just click on this picture here, and it's going to take you to this page here. Okay, go ahead and download this thing. It's just a little Excel type spreadsheet. You can open it on OpenOffice. You can open it on Excel, whatever. Now, what I'm going to do, I'm going to put in my account balance right now, which is 1314. I'm going to put that in right here. 1314. And then over here in percentage of risk, I'm going to go put 0.7%. Now, if I put 0.7%, I just know that's what it is because I did it a few minutes ago. If I go in here and I put in $1,300 or 1314 and put in a percentage of risk at 0.7%, don't worry about the stop loss. That's for Forex. Never mind that. But if I put that in, it's going to tell me that my risk per trade is about $9 or so. I mean, it's not exact. It's not like, 8.8 or whatever. It's just to the whole number. But I know that if I'm risking about $9, then I'm risking less than 1% of my trade. So let me minimize that. What'd I do? Where's my... Okay, so on an account balance of 1314, I've got a risk here of $8.80. You can see that right here where it says margin. Now, right now, I'm at a loss. Now, why am I at that loss? I traded on a 5-minute a 5-minute chart instead of looking at the hourly chart. Now, had I looked at the hourly chart, am I going to get into this trade? Most likely not. Paid a little bit too much, but guess what? I traded less than 1%. So I can make that mistake because I can come back from an $8 loss. What I can't do is if I made that mistake and I traded, 88 or 90 or $100 on a $1,000 account, I'm not going to come back from that loss for a while. But coming back from an $8 or $10 loss, I can do that. Now, whether it closes below this line or closes above this line is irrelevant at this point. Hang on just a second. Rich, let me send you this again. Rich said he can't see the link, so hang on just a second. Can you see it now, Rich? If not, okay, cool. If you can catch up, cool. Okay, that's odd. Okay, John, I'm going to send it to you too. And I'll send it in general chat again. Just to make sure everybody... Does everybody have the link? Oh my goodness. Okay, go to this address. Okay, hang on. Let me pull it back up here. Sorry, guys. Oh, what did I do with it? I'll show you how to find it. It's real easy. Type in TraderBot Marketplace. It's just a little tool. Type in TraderBot Marketplace here. And whenever it comes up, you're going to want to go down to Resources and go down to Account Size Calculator. That's how you get to it. Account Size Calculator. It's going to pull up this page here. And just click right here in this picture. There you go. Now, I'm going to tell you something about this Account Size Calculator. Christopher Wall. Does anybody know who Christopher Wall is? He is a trader out there. If you know who he is, just type yes in the little chat box. Christopher Wall is one of the best men I know. Now, I don't know him personally. I've never met the guy. We have talked back and forth. You can get to know a character of a person even through Facebook over years and years and years. And the guy's a stand-up guy. He's the guy that created this. And then go here to download it. So that's how you get it. Okay. Let me take a sip of my water real quick. Now, if I am looking at this strike right here, which is what strike is it? 118.35. 118.35. Right now, I can buy that for 56. It's right at the money. That's an at the money. At the money. I'm not saying buy it. Don't buy it. I'm just showing you what I did here. Okay, it's right at the money. You can get it for between 50 and 60, whatever. Whether it closes above that strike or below it, again, is irrelevant right now. What we're looking at is risk. What are you risking? Because risk is one of the biggest mistakes. Right now, I'm risking $8.80, so I can do whatever I want to. Risking less than 1%, you can. You can take that deep in the money trade, which is what I did, risking 88 to try to make 12. Anyhow, the reason that I did this was because what I thought, okay, let me show you what I saw at the time. And this is why you need to make sure that you have a little checklist. At somewhere like here, I saw that there was a price for 88 way down here. Okay, now given that that next bar, if this was an hourly chart, would have to close way down here in order to lose. That's why I took the trade. However, I was looking at a 5-minute chart. That was a mistake. Had I seen the hourly chart, right here, let me get rid of this text here. Had I seen the hourly chart, price was only about right here, you know. No way I'm paying 88, you know, for that close. So that is a mistake that I made. Now, why did I make that mistake? Why did I not follow my checklist? Well, I was preparing for the webinar. I wanted to place a trade just to talk about risk. There's all kinds of ways to make mistakes. However, if you just keep a little handy dandy notepad around and you do something like this: 1, check your time frame. 2, check your expiry. And 3, double check. If you just have a little piece of paper in front of your computer that has these 3 things on it: check your time frame, check your expiry, maybe check your price, you know, and double check it, you're not going to make this mistake. Because whenever you're checking your time frame, what's it take? I'm going to look up here. I know that 5, that means a 5-minute chart. Okay, I don't want that. I'm going to look at an hourly chart. Now, check your expiry. Look over here, look right here, and make sure that on the recording you can't see this, but the time left says 37:47. Make sure that that adds up, because from time to time maybe the browser gets hung, whatever. You want to make sure that the expiry is the one that you want. You can also look over here. If that's not the right expiry, you can look over here and choose the proper expiry. So go through that. Hang on a second. Okay, so let's talk about the emotions of trading. I've got this trade on. As you can see right now, I'm down $2.80 right here. Now, that's on 10 contracts. However, let's say I was a brand new trader and somebody told me that you can risk this and make this guaranteed every day, which is not going to happen. If let's say I risked 100 contracts, what would my risk be? Well, it'd be $88. Now, $88 is going to bother me a whole lot more than $8.80, which is my risk right now. What if I even go, really large and risk like $500 on this trade, and then I lose it? What's that going to do to my self-esteem? How am I going to talk to my wife? First of all, not just with trading, but with everything in life. If you're married, if you are not 100% honest about every trade and about every gain or loss with your spouse, shut your computer down right now. You don't need to be a trader if you cannot be honest. In the beginning, I was not honest with my wife. I would hide trades. I would risk too much. I would lose $1,000, and I wouldn't tell her. And then she would find out later, and it was kind of like a lie. Well, we got over that hump, and now she knows everything. She's got all my passwords. We work together. But if you're not honest with your spouse, it will cause marriage complications. So be honest with your spouse about every trade, about what you're doing. And my spouse helps me whenever I get into a down period or lose my mojo, something like that. She helps me get my head back on straight. Okay, so be honest with your spouse. Check everything. Double check it. Don't listen to gurus without checking them out. And don't get emotionally attached to any one trade. And that's about the biggest trading mistakes that people do. That's the top ones that blow out their account. In that, what is the top trading strategy people use to blow out their account? It's called martingale. It means that if let's say I'm trading here and I've got a end of day contract order, I go long here, and it continues to fall, and then I buy some more here, and I buy some more here, and I buy some more here, thinking, well, all it's got to do is come halfway back up and close, and then I win the trade. Well, that's true, and you're going to win a lot of times doing that. But there's that one time when price is just going to, flip and tank, and it does it all the time. I mean, you can look at any chart. Let's go back, and you can find what they call a black swan. Now, let's look at this price this chart right here. Let's look at this chart. Now, all you see, price is trending, and it's trending hard. It's trending hard, and it's going up. And maybe somebody's like, well, I'm not going to risk going short there. I want to go long. And then price just tanks on them. And it happens all day, every day. If you're trading small, you can withstand it. If you're trading large, you cannot withstand it. So, all that being said, be careful and treat this as a business. Don't treat it as a hobby. Don't treat it as just something on the side. You want to be a trader? Treat it like a business. One of the things that I do, I keep a trading journal. I've got a thing on YouTube about trading journals. Let me. YouTube. I should have figured out how to. I should have pulled it up. Let's see. Here it is. Here's my trading journal. Now, I'm going to put this address. I started this trading journal a long time ago. I'm going to put this address in the chat box again. Copy. I want you to watch this YouTube video, and I'm going to play just a little bit of it for you right now. Hey guys, today is August 31st, 2015. Many of you have asked me, how long does it take to learn how to trade? I'm going to show you something I found. We are getting ready to move, and in an old box packed away, I found one of my old record books. This shows a date of October the 23rd, 2010, in between the International UFO Museum and Research Center that me and my... No sound? Okay. I apologize. Anyhow, what I'm talking about is my trading journal. I've got the YouTube link right here in the chat box. I want you to go watch that when we're done with this webinar, because you need to keep a trading journal. Treat everything like a business. And that's about all I've got to say. Okay, do we have any questions on anything trading mistake related? Not specific trade related, but generalized trading mistakes. Such as, what's the biggest trading mistake that you have made? Not money-wise, but what's something that you have done that has caused your trade to lose, and you knew that that was what it was? Here's mine. Back about, 3 years ago, when Cantor Exchange, I think it was about 3 years ago. Anyhow, it was when Cantor Exchange had a different trading platform. Number one, I liked the idea, but I didn't know how to use the trading platform. So while I was in there learning how to use the trading platform, I ended up, I made a stupid trade and lost almost the entire account on one trade, because at the time, I did not take the time to learn the platform before I started trading real money. Now, you can trade onesies, twosies all day long. One contract, it's $1. If you place a at the money trade, you're risking 50 cents. You can do that all day long. That's fine. However, if you make a mistake and you go in there and you risk, $500 instead of 50 cents, that's what you don't want to do. So learn. Is there anybody that wants to share any type of trading mistake that they have made? If not, that's fine, and I will continue on. And while we're waiting, Mr. Greer, we're going to talk about support and resistance again for a few minutes today. But as far as the trading mistake webinar, that part's over. If you have questions, of course, I will answer them. The next part is just going to be a few minutes. We're going to touch on support and resistance again, kind kind of picking up from last week. So, Mr. Greer, are you around? He was asking me about some support and resistance topics earlier today, and I told him wait till the webinar and I will talk to you about that. One of the things that he was asking is how to compare support and resistance. Okay, first of all, when you're looking at support and resistance, the first thing you want to do is look at the daily time frame. Daily only. You need to find out what you're looking at before you know where to what to trade. Now, right now, all I see some support and resistance that's not anywhere. Price is not anywhere near support or resistance. Here's price right here, and here is resistance, and here is support. Here's another support, here's another resistance, but price is not anywhere near support and resistance. If price is near support and resistance, then we can go look at that. But last week I touched on trading pretty much a 1-2 punch method, and I will explain that. Let's say there's your resistance right here at the top. Let's say price comes up here and touches this. Wrong little thing there. Let's say price comes up here to touch your resistance, and it goes up, comes back down to touch your support, and then takes off from there. This is your daily resistance. Well, we need to know when what the trend is. Well, the trend is up. It's up right now, clearly up. It's had a pullback over the past few weeks, but it is up. The trend is up. So since I know the trend is up, now I'm going to go down to the 1 hour time frame. Okay, hang on. He told me go to USD yen. Let's look at that one. Okay, here we've got kind of a different situation. What we can see all the way back to March, price has been in a range. It's neither trending and it's not trending. So what I see right off the bat here, we've got support right there, and we've got resistance. We got resistance right there, and we've got support right there. And actually, this is a perfect example because we've got 2 touches right here. We've got 2 touches right here, and price is in the middle right here. What am I going to do on this trade right now? Nothing. I'm not going to do anything. Price is still too far from a major support or resistance. What am I going to do? I'm going to go down to an hourly time frame. Since I know it's not trending, I know that I can trade either direction. It doesn't matter. The only time that I'm going to think about getting out is if this price comes up to this resistance level right here. That's when I'm getting worried. But until then, I can do whatever I want to, especially if I'm not trading too large. So I want to go down to the 1 hour time frame. Now, I know price is in a range right now. What's one of the best indicators to use if price is in a range? Well, that would be your handy dandy relative strength index. Now, when price is in a range, you can see, let me fix this here. I want to change the color. Okay, when price is in a range, you can wait for price to get up in this what's called overbought area, and you can look for selling opportunities, or get down to this oversold area and look for buying opportunities. You can't do this in a trend. In a trend, you want to buy when price is strong and sell when price is going down. However, in a range, the RSI is a pretty good tool for when price is in range, because when price comes up, look to sell. Let's look at a couple of opportunities. We've got the line set at about 70 right now, and that's about the normal. 70 up on the top, 30 down on the bottom. So let's look. Price got up into this area and it fell off. However, depending on the expiry you chose, you see this big gigantic thing, gigantic bar right here, and this gap. If price gaps up and you lose your trade, well, no harm, no foul. more than likely it is going to come back down. I can't give you the specific percentages in this webinar. Maybe I can in next week's webinar, because I can talk about the tool suite then. But you can look for selling opportunities when price gets up above the 70 on the RSI, or you can look for buying opportunities when price gets down below 30 on the RSI, only if price is in a range, not when price is trending. You don't want to do this when price is trending. So let's go back down to the hourly. So let's look for our support and resistance areas just based upon what we see here. We got one right here. We've got one right here. Now price is near support right now. If I want to go ahead and buy that for, like, you know, I'm not going to buy it for end of day, because end of day is in about 20 minutes. But if I want to buy that for end of day tomorrow, you know, whenever the exchange opens back up or whatever, well, I can do that. You know, if price comes up here, if I want to sell it, you know, I can do that. My main concern is risk. How much am I going to risk on any given trade? Now, technically, this right here can also be, hang on, I lost it. Technically, this area right here can also be resistance, but guess what? Right now, it's just a spike. That's all it is. It's a spike up and a spike back down. Now, Mr. Greer, you were talking about, I remember something in our chats about about market makers faking out the market. Yes, it happens. Happens all day, every day. And that's exactly what this is right here. So instead of looking at a support or resistance always as one line in the sand, you can look at it as a zone, such as, you know, here is a zone. Let me scroll out. A lot of times price will add up, but they won't add up perfectly. And here's a good example. Okay, you see how, I don't know if you can see it, but price pokes its head up above this line just a little bit here, and it does not do it here. It pokes it up, you know, right there. So this area right here is a resistance area. Now, we don't know the exact number. We don't know the exact price where, you know, there are more sell orders or more buy orders, but we've got a pretty daggone good idea. So if we've got an idea and we're watching our trade, and we're trading small enough, we can do whatever we want to, you know. So, okay, do we have any questions? Because I am about done. If we do, great. And I'll answer anything. I don't care what it's about now. Yes, I will look at... Oh, there we go. Euro yen. Euro yen on a daily time frame. Okay, price is trending. You can see price trending right here. Price trending up. Let's draw a trend line. Rich, I'll get to that here in just a few minutes. And actually, I might extend this webinar, but I will not put that part on YouTube just yet because we're still working on it. However, just hang on a second. Okay. Well, that's no good. Okay, now let's scroll in here. Where am I at? Okay, you see price is trending up. Why did I place the trend line above price? Well, I'm going to show you. Because I can't place it here. It's too close. You can't go back just 2 or 3 bars and place a trend line because you don't know, you know, what's going to happen. It's kind of noise. What I did was I placed it here on the original. Sometimes it's hard to explain my thoughts. We got one touch here. We got one touch here. We got another touch here and another touch here, and that's what I based the trend line off of. Now what happened? Price broke through the trend line a little bit, went back up, and now it's starting to fall. Do you remember that 1-2 punch I was telling you about for horizontal trend lines? It works on diagonal trend lines as well. Price broke through, came back up, and fell right back down. Now, it's not perfect. It's not perfect by any means, but that's exactly what happened. Price came back up to touch the trend line to kind of test it, and then fell off. Do I think price is going to fall or go up? I think price is going to continue going up in the trend that is currently going up. I mean, the one that we just looked at. However, I may be wrong, whatever. If I am wrong, what am I going to do? I'm going to go look at the most recent support, which is right about here. There's a touch here, and a touch here. If I want to get all technical, I can put support right there because that's the lowest touch. However, that spike down was probably for only like 2 seconds or whatever, whatever. I mean, it's just a line on a chart. But I've got a touch here, and I've got a touch here. A lot of people out there say the more touches on the trend line, the stronger it is. I call bull hockey on that. I say if price comes down here and touches, and then price touches it again, and price touches it again, sooner or later, it's going to do one of two things. It's going to either bounce off or it's going to fall. And guess what? Even if it bounces off and it comes up here and it does all this and it comes back here, if it hits that line too many times, price is going to fall through there. It's going to go right through there. So watch how many touches you've got on a trend line. The magic number for me is 5. If I look at a trend line and I see 5 touches, I know that on the next couple of touches, that sucker's going to plow right through there. And I can even prove that with something that we've got something called the tool suite. Now, not for trend lines per se, but we can do it with RSI and things like that. I am going to talk about the tool suite now. I'm not going to air this next part on this video on YouTube. You can look at some of our other videos on YouTube to find out more about the tool suite, but we are going to talk about it right now. Okay, oh yeah. Look at the H1 first. Okay, so we got our, hang on. Okay, here's the H1, the way it looks. The support and resistance is the same right now. The only other thing that I could think about or see is a support right here, but guess what? It's only one touch. It's really only one. It's that one right there. I mean, people could argue, oh yeah, well it touches here and here. Well, it also touches here, and here as it stair steps up. But basic common sense, a basic common sense approach will tell you that this trend line or this support line is not nearly as strong as this one. Why is it? Because this one has several touches on a daily time frame. This only has one touch on a hourly time frame. And if I want to go analyze it a little bit more, I'll scroll out here. Now, whenever I scroll out, what am I looking at? I'm looking at the daily time frame just broken down into little different pieces. You notice it looks pretty similar there as it does. Phooey. Let me try this again. Let me scroll in a little bit. You got your daily, and then you've got well, it's the same thing. It's the same exact chart, just broken down into little pieces. That's all it is. Hang on, I got to get a drink of water. So, common sense is going to tell you if the larger time frames always trump the lower time frames, and the larger time frame on this chart or on the daily chart has, I believe it was what, 3 touches? 1, 2, 3? Yeah, 3 touches. And the hourly only has 1 touch. Which one of these trend lines, or which one of these support lines would I want to pay more attention to? This one or this one? And I'm going to go with this one every single time. Now, how long is it going to take to get down there? Who knows? It may be down there next Tuesday. We don't know. So if I'm looking for short-term trend lines or support lines, I can use this, but I also need to look at it a little bit more, you know. Where are we at here? Oh, let's see. I'm going to zoom in. Well, I mean, technically, if you're looking at only support for today, I mean, it's right there. So I can't do that because that's where price is. Price needs to come down and then bounce off somewhere before I can even draw a line. So price is trending down today. That's, you know, that's just what it's doing. It's trending down. However, if I'm going to look at the daily, I know the price is trending up. So personally, I don't want to go short today. But I mean, you can. Price is trending down today. Why not? You know, it just depends on what all you're looking at. I don't know what you're looking at. Let me get rid of this RSI chart. It's taking up too much room. I don't know what you're looking at, but if we're looking at the trend line for today only, this is what I'm going to do. There's my resistance. I know that right off. Oh, where is my trend line? There is my trend line down. Now, depending on, you know, what all that you want to do here, we've got it. We can do like what's called a channel here if you want to do that. Hang on. Okay, we got a channel down. It's in the downward channel. Since price is trending down today, you know, it's touched this channel 1, 2 times, almost 3 times. What is it going to do? I don't know what it's going to do. I have no clue what it's going to do. You know, I don't. So what am I going to do? I'm going to go to my tool suite and I'm going to look at what the best probabilities to trade. But on this particular one, if I want to go long right here, I want to get out if this thing comes down below this trend line. I'll tell you that. Like if price, if price dropped down here and it got down to here, that's when I want to get out. I want to close out my trade. Most likely what's going to continue to happen is price is going to remain in this trend line and then it's going to break out one side to the other, and it's going to do it in this fashion most likely. I can't say for 100% certainty. That's kind of what it's going to look like, you know, for the most part, unless there, you know, let's say some politician comes out and opens his mouth, then it can just, I mean, drop, you know, 1,000 pips, whatever. We don't have any control over news. But in the general course of trading, this is the way that it usually happens. Right now, you know, I can't tell you anything other than that about that trade. In Forex, it's a very tricky thing, because whenever you're looking at the euro versus the yen and versus the dollar and all of that, last week I touched on looking at multiple currency pairs. Which way are they going? You know, what direction are they going? Is all of the euro pairs, euro yen, euro USD, euro Canadian, whatever, is it all moving in the same direction? Okay, you took a sale at 12 o'clock. Cool beans. That's good. What was your expiry? How long out did you go for? Okay, well, no worries. But channels work, trend lines work, RSI works. Everything works if you stick to that, you know, that one trading methodology. Okay, the webinar is over. Hang on just 1 second. I'm gonna cover the tool suite in just a minute. I gotta write something here.